If global debt is $300 trillion, who actually owns it? Global debt hits $300 trillion, new all-time high. Your first reaction is disbelief. Your second reaction is a question almost everyone asks. If every country is drowning in debt, who is the one holding the IOUs? Because here's the paradox no one explains. Not only do governments owe money, and corporations owe money, and households owe money, but somehow, every year, the global debt goes up. Yet nobody ever seems to run out of lenders. So who is lending the world this impossible amount of money? Is it a handful of billionaire families? Is it powerful nations lending to weaker ones? Is it banks? Is it central banks? Or is the system far stranger than we've ever been told? Stay with me because this story begins centuries ago. Long before the first central bank, long before Wall Street, and long before the idea of global debt even existed.
Alex.
Set the stage. The hidden system behind the numbers today, we treat debt as normal.
Alex.
You borrow for a house, a car, a business. Governments borrow for wars, roads, pensions, and votes. But debt hasn't always been normal. That used to be a personal contract, one person lending to another. There were consequences, real consequences. Then something changed. A group of merchants and bankers in Europe discovered a tool more powerful than armies, the ability to create money through credit. This wasn't gold. This wasn't silver. This was an agreement, a promise, a number on paper that acted like money, even though no one ever dug it out of the ground. And over time, that system grew into what we now call the global credit machine. A machine that produces debt the way factories produce goods. A machine with no off switch. And a machine where the owners of global debt are often not individuals, but institutions, funds, and even government entities that most people have never heard of. But to understand who owns the $300 trillion, you have to understand how the machine began. It's the origins, how debt became global. The story starts in the 1600s. Europe was exploding with trade. Ships sailed across continents carrying spices, metals, and textiles. There was a problem. Trade moved faster than gold. Merchants didn't want to carry chests of coins across oceans. It was slow, dangerous, and expensive. So Dutch and English bankers created something new, bills of exchange, promises written on paper. They allowed merchants to buy and sell using credit, and suddenly money didn't need to exist physically. It could exist on paper. This was the birth of financial debt, the kind that scales. A century later, governments copied the idea. Wars were expensive. Empires cost money. So governments borrowed not from kings, but from banks and private investors. By the 1800s, debt had become the engine of national power. Countries that borrowed more could fight bigger wars, build larger navies, and dominate global trade. Debt wasn't just money anymore. Debt was geopolitical power. The rise how the credit machine took over. Fast forward to the 20th century, World War I, World War II, the Great Depression. Every crisis pushed governments deeper into borrowing. But the real turning point came in 1971, when the U.S. ended the gold standard. For the first time in modern history, money no longer needed any physical backing. Central banks could create unlimited liquidity. Commercial banks could create money through lending. Governments could run deficits indefinitely. Debt transformed from a tool into the lifeblood of the global economy. And with it came a new class of debt owners. Sovereign wealth funds, pension funds, insurance companies, investment funds, commercial banks, central banks, private creditors, foreign governments. These institutions became the silent creditors of the world, the ones holding trillions of dollars of government bonds, corporate loans, and household mortgages. And just like that, the global credit machine fully awakened. The breaking point when the system outgrew reality. By the early 2000s, something strange was happening. Global debt was rising faster than global GDP. Countries were borrowing more than they produced. Corporations were borrowing to buy back their own shares. Consumers were borrowing just to maintain their standard of living. Debt became the oxygen of the modern world. But oxygen can also ignite. 2008 proved that. A cascade of bad loans in the United States triggered a global financial meltdown. Trillions of dollars vanished. Banks collapsed. Governments panicked. And the solution was more debt. In fact, after 2008, global debt didn't shrink. It tripled. And then came 2020, another crisis, another flood of borrowing. The machine was running faster than ever. But now, we've reached the part everyone is afraid to ask. If the world owes $300 trillion, who is actually the creditor? Who is collecting interest on this mountain of money? The answer is both simple and unsettling. The reveal who owns the $300 trillion? There is no single superpower, no secret family, no hidden king of world finance. Instead, the world's debt is owned by a complex ecosystem. 1. Pension funds, the retirement money of ordinary workers. These funds buy government bonds and corporate bonds. When you hear Japan owns US debt, a lot of that is actually Japanese pension money, not individuals. 2. Insurance companies, they hold trillions in safe assets to pay future claims. Government debt is their backbone. 3. Commercial banks, every mortgage, business loan, and credit line is debt. Banks hold it. Banks profit from it. 4. Central banks, they buy government bonds to stabilize economies. They don't just regulate debt, they literally own it. 5. Foreign governments. China, Japan, the UK, and many others hold vast amounts of US, European, and emerging market debt. 6. Investment funds, mutual funds, bond funds, ETF portfolios. If you invest, you likely own a small fraction of global debt without realizing it. 7. Corporations borrowing from corporations, big businesses, lend to each other through commercial paper and corporate bonds. A large chunk of global debt is money owed. It's the same citizens who complain about it. Your retirement fund, your insurance policy, your savings account, your mutual fund, they may all hold slices of this $300 trillion. The world is both in debt, also the creditor of that debt. This is the paradox that keeps the system alive. Fallout. What happens when the machine runs too hot? But here comes the danger. When debt grows faster than wealth, faster than productivity, faster than population, a breaking point appears. Countries struggle to pay interest. Corporations face tighter liquidity. Households drown in loans. And when no one can borrow, the machine stops. When the machine stops, the economy stops. That's the scenario policymakers fear more than inflation, more than recession, more than market crashes. The global economy is now addicted to debt. Failed fixes why every solution makes it worse over the years. Governments have tried to tame the debt monster. Austerity programs, higher taxes, lower interest rates, raising interest rates, printing money bailouts, stimulus packages. Every fix creates new cracks. Every crack requires new fixes, and every fix creates more debt. There is no painless way out. Modern parallels history repeating itself. If this story feels familiar, it's because history is repeating. Ancient Rome, 17th century France, the British Empire, Soviet Union. Every powerful system eventually borrowed more than it could sustain. Every time. The pattern is the same. Debt fuels growth, growth slows, debt keeps rising, interest becomes unbearable, the system resets. Today, global debt has reached $300 trillion, and it is growing faster than ever. Just look at this pattern. In 1985, $1 trillion. In 2000, $80 trillion. In 2010, $200 trillion. Today, $300 trillion. Debt isn't rising linearly. It's rising exponentially. And exponential systems don't last forever. 3 takeaways. Takeaway 1. Debt is not the problem. The speed of debt is economies can manage debt. What they can't manage is explosive growth in debt. Takeaway 2. Ordinary people own more of the debt than they realize your savings. Pensions and investments are part of the global creditor network. Takeaway 3. The global economy is now fully dependent on borrowing. If the world stops borrowing, the system collapses. If it keeps borrowing, the system becomes unstable. This is the trap. Global debt isn't just a number, it's a mirror, reflecting how modern societies live on borrowed time. The real question isn't who owns the debt. It's what happens when the world can no longer afford to borrow from itself. Perhaps more importantly, what replaces a system built entirely on promises? If you want more deep dives into the hidden history of money, power, and global finance, make sure to like this video, subscribe, and hit the bell icon so you never miss the next breakdown. Thanks for watching, and stay curious.